Good morning, I'm Robert Tan. From your wallet to the wider economy, join us as we follow the money. The BSP raised rates again to 4.75% and it signaled that it might not be finished as of yet. So how do you follow the money from here? And here to help us this morning is Marvin Fausto, President of the COL Strategic Growth Fund. Good morning, Marvin, and welcome to the Follow the Money.
Hi, good morning. Good morning, Robert, and to your viewers. Thank you for having me.
Thanks for joining us this morning. Now, Marvin, the BSP again raised rates to 4.75%, 25 basis points, and signaled that another hike may come in August. Now, what does that actually mean for a Filipino paying a housing loan, carrying credit card debt, and trying to grow their savings?
Definitely for those people who have loans, they will have to pay a little bit higher than they used to. I think interest rates will remain high, and it will remain high for some time. For those who are borrowing, even in credit card, I think it's going to be tough for the coming months. But for the savers, I guess those who have enough savings, they can benefit from the high interest rates, more particularly on their short-term investments or even long-term investments. But it's going to be harder for them to save simply because they will have to focus on the essentials because budgets will have to be paid to those that need to be paid, like loans. But for saving and investment, I think they will have to do some certain reallocation of their budget.
Do we see a danger in the future since the rate hikes are in? For those who have loans that are not fixed rates, do we see that more and more, let's say, those who have loans might not be able to pay them in the long run?
Those who, I think history has told us that even if rates go up a bit, like 25 basis points or even 50 basis points, it is not a determinant of high non-performing loans. It's really when the economy really suffers a lot. That interest rates may have a bit of an effect on loan borrowers or the propensity to borrow. But for the existing borrowers, we've seen the data. It has not moved the needle as much so far. So I think we're still okay. We're still okay, Robert.
Now, Governor Remolona says maybe another 25 basis point hike is possible and that a 50 basis point or even an off-cycle move remains available. Now, what would the BSP need to see to justify something that aggressive?
With the close resolution of the issues in Iran, in US and Iran, I think it is the inflation expectation of businesses and people that the BSP will have to be sensitive about. I guess that is where they are really focusing their attention. If people are expecting higher inflation, or the expectation of businesses inflation will be higher, the BSP will have to send a signal, wait, we will have to increase interest rates. You guys will have to temper down your inflation expectations. The oil price have already gone down. There is no need to pass it on too much. But I guess businesses will have to look at the way their costings, their inventories, they're passing on their higher cost consumers, or balancing act on your margins as well. So,
because the BSP says core inflation is rising and that original oil shock is now spreading through second round effects. Now, if you look at it in practical terms, Marvin, what prices are likely to rise next? And how difficult is that kind of inflation to reverse in the future?
We have seen the increase of volatile commodities like oil and even transportation. But what worries us now is really the core, as you said. Core is that are not as volatile. We're talking about the ones that are really affecting everybody over a longer period of time. These are your daily things like even the basic commodities that you are consuming. And that thing is going to be increasing. And as we have seen before, inflation trends and it is trending up. It will take a while before this thing will slow down or even go down. So people will have to tighten their belts for the coming months, especially when rains come, no? When rains,
Yes.
storms, floods, and even El Nino comes. So I think we will have to tighten our belts. People will have to watch whatever they're spending and look at their budgets.
And to top it all off, we see growth. It's already weak as it is. Now, what happens to household spending, business investment, and the jobs if the BSP delivers more rate hikes over the coming months?
The primary responsibility or role of the BSP is for price stability. Well, unlike in the US, it's price stability and maximum employment. As I understand it, is that number one is really price stability. And they have to do that as a priority. But it has a secondary effect. As you said, in the economy, it can slow down because the money supply is being tightened. Now, we will have to go through that slowdown, the slowdown in the economy, and see how prices will correct itself given the slowdown. When the economy slows down, demand weakens, and when demand weakens, prices stabilize. That is the hope of the BSP, and that is what we really hope things are going to happen sooner rather than later.
Now, Marvin, let's look back a little bit from the last time we had a conversation when the BSP raised the interest rates. You weren't for it. You didn't agree that they should increase. Do you have the same stance today? Is there more information right now that we are given that this is the right move?
At that point, when I said that our economy is really slowing faster than we expected, and I was afraid that if BSP increases the rates, it's going to slow down the economy much, much faster. That's why I was worried that BSP probably should not have done it. But having seen the data now that people are expecting more and more, and even the core inflation really increasing, and the expectation of businesses and people are farther or higher than what we expect, I think it's just appropriate for the BSP just to temper that expectation by increasing interest rates, sending a signal that things will have to be tightened, demand has to be managed so that it will not going to have a longer effect on the economy.
Yes, but having said that, Marvin, is monetary policy enough to fight this inflation? And what should the government be doing alongside it so that it mitigates, it doesn't rise much higher than we expect?
It's always dual thing. No, one is monetary policy, the other is fiscal policy. Monetary policy by the BSP can only do so much. I mean, just tempering the interest rates, no, increasing and decreasing the money supply. The second role is really the government should have to spend more in fiscal spending. Number one of which is the infrastructure. We have to see this thing moving forward faster than what people are expecting. We have yet to see flood control, infrastructure, implementation of the budget. We have a bigger budget this year already. That has been passed. And we have the money. I mean, the Philippine government, they have the money.
Yes.
But it's the implementation that we really need to see for the economy to bounce back faster than how it's doing right now.
Well, that's a very critical conversation because if you mention that we do need to increase our infrastructure spending, but in light of the flood control issues, the corruption issues that we're experiencing right now, how can we balance that? And with the call of transparency and accountability, there are some contractors who actually don't really want to pursue that right now.
Yeah, it's a tough job. I'm the people in the economic managers are really having a tough time. I just saw Secretary Deco last night giving a speech to a bank, and he's really very much into the business of trying to improve the way they do things. Our government moving as it is, but the wheels are really moving
very slow.
And we just hope and pray that things move a little bit faster, and that we see things moving along, and that is what the Filipinos badly need. And hopefully they do it right.
But in light of that, we have some good news. the U.S.-Iran agreement is bringing oil prices down, but it does remain an interim deal and the hardest issues are still unresolved. Now, are investors right now pricing in peace too quickly? And how should they protect their portfolios if the agreement falls apart? They're given 60 days.
Yeah, you asked two things. One is how do they price? I think investors have not priced in fully, or they've only priced in 50 to 60% of what has happened. Simply because the oil has gone down, yes, but the second round effects will still have to be felt. Remember, July inflation was the lowest last year. Last year it was below 1%. You will have a year-on-year low base effect when the July inflation comes out. That will come out in August. We still have to see how that's going to pan out. Now, that's the first. The second one, how investors should move their portfolio is, of course, they will have to build up their emergency funds. They have to make sure that emergency funds are intact because things are going to get tough, tougher than what we still have to see storms, floods, and increased prices of the second round effects.
Right now, as people, as people try to tighten their belts,
have your emergency fund. You have to, but you should not leave. You should not stop investing. You should not get away from investing. Your discipline of investing in a diversified portfolio, both equities and bonds, which is basically how we should be doing our investing for the long term. You should not leave that discipline.
But before we answer all that, so that, giving more advice to those watching right now on how they can actually build their emergency fund, we'll just take a short break. We'll continue this discussion after this break. Keep following the money. Welcome back to Follow the Money. You're still tuned into our conversation with Marvin Fausto, President of the COL Strategic Growth Fund. Now, Marvin, before the break, we're talking about how people can actually build their emergency fund. It's easier said than done, especially during the times of crisis where everybody is tightening their belts. What would be your best advice for them right now? Where should they start saving first?
Yeah, that's a tough question, especially things are getting tough right now. Like it or not, emergencies come. And it's very hard for us not to have an emergency fund, which you can do that in a time deposit or a money market fund, which is about 6 to 12 months of your expenses. That is basic. If you have to have that intact right away or build it right away. Now, the other part of your portfolio, which is basically for the medium term to long term, depends on your objectives. Investing is really for depending on your objective. You have a medium-term goal, you put in bonds, long-term goal for the equities. But we always advise people to have a diversified portfolio, not just local, but even global. Not just equities, but even bonds. So we have this strategy, we call it a COL multi-asset strategy, which we give to our clients as advice to let them understand how it is work and diversified portfolio, and that could give you a very resilient portfolio even during volatile times.
Now, when you look at where your investors are investing now, is it more global than local?
For the new funds, because of the global performance, people are putting more global, more particularly in the US and in other parts of the world like China. We are seeing some migration of that, which is a very good strategy because, as I said, it is a very good thing to diversify a portfolio, and we in COL are espousing that, and it is now available to everybody. Now, there's no reason for you not to be investing in a globalized portfolio, but we always say, do not forget the Philippines. because we are.
Definitely.
we're
Kawawa naman tayo.
No, not only that. Not only that, because there are a lot of opportunities in the
Yes.
Philippines. You just have to be a little bit more selective, like the way we do it in COL Strategic Growth Fund. You have to be selective in choosing the investment that can survive, not just survive, but give you more earnings, more dividends.
Yeah.
The prices have gone down, but earnings of the companies continue to grow, and they continue to increase their dividends. The dividend yield has gone up, and if you have been buying those companies that are doing well, then you will be rewarded. But of course, that should be your strategic. We
Yeah.
are Filipinos. That's a strategic part of your investment. But diversify in other markets as a matter of managing your risk.
Now, Marvin, you've spent much of your career saying that time in the market beats timing the market. But the PSE has been down in real terms over the past decade. What do you say to Filipinos who stayed invested and is still worse off today?
What I would say is that do not just invest in the Philippines and forget about it. Meaning, what I'm trying to say is that when you're investing, you do it a little bit more active. Meaning, you watch it also from time to time, not every day, not weekly, not monthly, but on a regular basis. Let's say on your birthday, on your anniversary, on a certain days that you will have time to look at it and rebalance accordingly. But if you cannot do it, trust somebody who can help you out. Give it to a fund manager, give it to a fund that does that for you. So those two options are already open for you. If you don't have much time doing it yourself, I'm suggesting that do not forget it completely, but be a little bit active.
Yes.
Or get somebody to help you out. Then do the active management for you.
Marvin, for those watching right now, can you give a quick example? Where can they put their money right now, especially those who don't really have that much? Let's say 1,000, 5,000 pesos.
Yes. For those 1,000, 5,000 pesos, if you're talking about just starters, you can just buy a fund. You can buy a fund. In COL, we have a fund, we have a strategic growth fund that invests in the local market. We also have funds that are invested abroad. But if you just 1,000 pesos, you can just start with your emergency and do it the Philippine market. And then once it grows, you can do the global markets slowly and surely. Funds as low as 1,000 is available to everybody in our COL platform. You can choose but of course, I'm saying that you just have to be aware of the risks that are in investing.
Now,
especially when you're just starting.
Yes.
I mean, markets do not go just one way. It is volatile. That's why you have to have a diversified mindset in your investing.
Now, looking at the local markets right now, Marvin, it's been a minute since we had an IPO. Now, there's a pending IPO of GCash, of Mint, hopefully coming soon. How do you see that panning out?
I think it's very positive for the market. More because there will be more liquidity in the market. We will have a company that is more or less tech in nature that we do not have. Like, I mean, in the global markets, tech has been the darling of markets, and we have a tech company that will do IPO, and it's a large one. So hopefully, if you look back before, I don't know if you're around when Petron was offered, that ignited a good market during the time. And hopefully GCash, with its size and with its business growing as well, it can spur activity in the market as well as trading in the market. Hopefully people earn more and diversify them in other funds, in other stocks.
Now, the IPO is expected to draw in a wave of first-time and young retail investors. Now, what's your advice to them?
Of course, don't put your egg in one basket. I mean, invest
Diversify,
it with your eyes open. When you invest in, don't put everything there. I mean, just put an amount that you can forget for 3 to 5 years, or invest in that IPO with the money that you can put aside for stocks. Also, the allocation in your stocks should be in the general strategy of your portfolio, and put that IPO in the bucket where
So
you put
you see
stocks.
that as a long-term play, and they have to diversify something that probably gives them dividends or maybe go into bonds with a higher yield?
Definitely, definitely. You should diversify in bonds and equities. Definitely. That's always a strategy that's good for you for the long term.
Now, on the other side, let's look at real estate. Ayala Land has fallen to levels not seen in roughly 14 years, despite the company buying back shares and its parents stepping in. Now, is this a rare opportunity to buy a premier company cheaply, or should investors still be cautious?
I would balance my view on Ayala Land. It is going through a tough time, basically due to the low demand and higher interest rates. Now, it may be a good time for you to slowly look at it again. Company is buying back, and no other than they themselves know their business. And I think when you put your money in a company like Ayala Land, it should be an investment that is geared towards the more longer term or the longer term part of your portfolio, because Ayala Land will have to go through tough times. The real estate industry is suffering from high vacancy rates and probably lower demand, and they will have to go through that kind of phase first.
Well, still a lot to do, and we need all the help from all sectors, not only investors, but also the companies. And hopefully, the pending IPO will spur something in the market that getting the younger generation, getting more new investors coming into the market, not just getting it out there in the global field.
Yes, yes. They're only about 2% invested in the stock market. We still have 98%. I mean, there is
Only
still a lot
2% of our population?
Yes, yes. So
That's small?
That's small. And you have a lot more people who are just starting, or just investing, or busy with the way they do things. There's a lot of, other markets, they have a lot more investors in the stock market, 30 to 40%. And we are just 2 to 3%. And I think that is the upside we're looking at. We are in a recovery. We're still going through tough times, but slow but surely do your regular investing.
Well, there's always that light at the end of the tunnel, Marvin. I wish we had more time to get a lot of more insights and advice on your side. But before we let you go, we have this segment called the Rapid Fire segment. Just answer yes or no. No need to explain your answer. Let's start with this, Marvin. Will the PSEI hit 7,000 before year end? Yes or no?
Oh my God. Probably yes.
Yes? Very optimistic. Okay. First time investor, 10,000 pesos in your hands. Invest in the Philippine stock market? Yes or no?
Yes, yes.
Can BSP bring inflation back again to target before the 2028 elections? Yes or no?
Yes, yes.
Dollar cost averaging. Is it still smart advice today?
Definitely yes, yes.
Is the average Filipino genuinely wealthier today than 5 years ago? Yes or no?
Unfortunately, no.
And finally, Marvin, for every Filipino watching today who are very anxious and second guessing where to place their money, how do you follow the money right now?
How do you follow the money? Wow, that's a difficult question. Is that a yes or no?
No. Just a quick advice and answer before we go.
Understand what your objectives are first and foremost, and then create your portfolio in a diversified manner, not just locally but globally, both bonds and equities. So we have that in our platform. Just look at us and see how you can do it specifically for your own benefit. It's not a general thing. It really is a one-to-one thing. It's really based on your objectives, based on your risk appetite, and your time horizon. So how young you are, how old you are, depending on what you're going to do with the money, that's how you're going to approach it.
Okay, on that note, thank you very much for joining us this morning, Marvin. Thank you for your insights and your valuable advice to our viewers.
Thank you.
And that's all for today. I'm Robert San. Thanks for watching. Keep it here on the Bilyonaryo News Channel, and always follow the money.